Okay, very good afternoon, everyone. Can you hear my voice? Okay, so let's start the meeting. I will first maybe talk about this session. This one is a very new one for our Symposium National Accountancy. And I'm very happy because we are trying to raise the bar for our quality of Symposium National Accountancy by adding a new event that we call as International Conference for the Accounting Educators. Are you happy with my voice? It seems there is a lag, right, between my voice here with the one from the sound system. But is it still okay? Yeah, anyway, the International Conference for the Accounting Educators is initiated by the IAI to raise the bar for the quality of our national symposium. So today, the conference is the first one, and hopefully, and in the future, let's say next year, we are going to have more papers that also coming from international researcher. So our event for the conference would be better, and I think starting to be globally acknowledged. And for today, we are very lucky to have two distinguished speakers with us. One is Jonathan Levy, already with us here on the Zoom. Good morning, Jonathan. Jonathan is in UK. Here in Ternate is in the afternoon, 4 o'clock. I hope, Jonathan, you can also see my colleagues here in Ternate. So I think more than 200 accounting professors is gathering here. And we are very excited to hear from you and also from Mr. Chi Chun Lee later on the new IFRS on sustainability. Okay, so today we are going to have a little discussion after the presentation on how the IFRS S1 and also S2 are introduced and maybe started to be socialized to the corporation and also to the community to ensure that the IFRS S1 and also S2 will be implemented when it is effective on January 2024. So maybe I would like to introduce first the two speakers that we have this afternoon. The first one is Jonathan Levy. Let me introduce you first. Okay, Jonathan Levy is the Chief Connectivity and Integrated Reporting Officer at the IFRS Foundation, leading the team responsible for the technical development and market adoption of the integrated reporting framework and integrated thinking principles. He has over 70 years of experience working in public policy, corporate governance, and regulation in the accountancy and corporate reporting fields. Mr. Levy was responsible for the global policy and strategy at the IRRC from 2012 to 2021, and the Value Reporting Foundation from 2021 to 2022. During this time, he developed a particular expertise in ASEAN market, having worked across the region while living in Singapore. He has developed a deep understanding of capital market and corporate governance issues, working closely with business, investors, regulators, and accountancy professional bodies. Mr. Lebri led the public affairs and policy team at the ICAEW from 2004 up to 2010. From 2010 to 2012, he was head of communication at the UK Financial Reporting Council. He graduated in law from King's College London and started his career in UK Parliament as an advisor to several members of the Parliament. That's a brief profile of Jonathan Lebri that already with us this afternoon. So without further ado, Jonathan, you can start your presentation. I think you have first slide with you.
I do.
Hopefully, you can make it in 20 minutes.
I do, and I hope the from beginning. There we go. I hope you can see the slides. Thank you.
Can see your smile.
Wonderful. Thank you so much. And thank you for your very warm welcome. And it's a great pleasure and privilege to be able to participate in your symposium today. And I can see you all virtually on my screen. It's a great opportunity for me to raise awareness of the standards of the ISSB's IFRS S1 and S2 standards with you. It's a shame in some ways that I can't be with you physically, because in a couple of weeks I will actually be visiting Jakarta and hope to meet some of you at least physically when I'm in Jakarta in a couple of weeks' time. Because in addition to the responsibilities that I have for integrated reporting and integrated thinking, I'm also the ISSB's jurisdictional lead for several ASEAN markets, including Indonesia. So I look forward to working with the Indonesian market and authorities to help bring our IFRS S1 and S2 to the market over the next few months and years. But today I'm very much looking forward to engaging with you to explain some of the background and some of the content of the first two standards that have come out of the IFRS Foundation's ISSB, International Sustainability Standards Board. And this really is the beginning of a package of standards on sustainability disclosures that are aimed at achieving a global baseline for sustainability disclosure standards for the capital markets for the first time. So what we're not trying to do is take over the world. We understand that in different jurisdictions, there will be public policy needs, societal needs, and standards that will be developed at a jurisdictional level. But what we're trying to do is create a global baseline, one that international investors can engage with, so that capital can be allocated more efficiently and more effectively over the short, medium, and long term. And those key risks that we know exist in the sustainability dimensions, that are key financial risks, as well as material impacts on society, we want to make sure that those key risks and opportunities are captured and are capable of being communicated to an investor audience, because we believe that there are huge pools of capital capable of being used in order to advance sustainable business models and achieve those public policy goals. But we need to unlock that capital from our capital markets. We think information is the lifeblood of capital markets, and therefore our standards are aimed at engaging that capital market audience, providing decision useful information to investors so that capital can be allocated more efficiently and more productively over the short, medium, and long term. partners with other organizations, partners with national institutions to make sure that our global baseline is compatible with, in the jargon, interoperable with any national standards that are developed along the way. So, for example, in the European Union, there are standards being developed at the moment on what is called the CSRD, the Corporate Social Responsibility Directive, that is issuing sustainability reporting disclosure standards. But those standards are about the impact of a business on society, the environment. Our standards are about what that broader impact means for the business model, for the strategy, and ultimately for the investor. But making sure that those two dimensions of sustainability, the impact and the value creation, are not seen as opposites competing with one another, but are seen as the same system, as part of that same corporate reporting system. So we're working hard to work with other global organizations and work with national organizations to make sure that the standard system that we are developing is one global corporate reporting system that is compatible with one another, helping preparers, helping users of the information, and ultimately furthering in the public interest the goals that we all wish to see of more sustainable investment and more sustainable development as well. And I just want to remind us all of the journey that we've all been on, the speed of that journey. And I'm going to go through my slides in a second, but before I do that, the IFRS Foundation, which, as you all know, has been responsible for 20 plus years for the IASB's accounting standards, consulted the market in 2020 on whether it should establish a role, whether the IFRS Foundation should establish a role in sustainability disclosure standards. And the response from the market globally was emphatic, that the market really wanted the IFRS Foundation to take a responsibility in developing that global baseline and helping to connect sustainability issues to the financial markets and to investors. And it was actually one of the climate talk summits, COP26, in November 2021, that the announcement was made that the ISSB, the International Sustainability Standards Board, that would be a sibling board to the IASB, would be established under the IFRS Foundation's remit. Now, we all know, for those of us who've been involved and observers of standard setting in the accounting world over many years, that it takes quite a long time in order to effect change, in order to bring in new standards, because of the due process, the correct due process that must be gone through in order to demonstrate the legitimacy of the standards that are being created. And what the ISSB and what the IFRS Foundation decided to do, in order to accelerate the process of getting the first two standards issued into the marketplace, was they consolidated several of the organizations that were currently part of the corporate reporting landscape in order to accelerate, bring in that expertise in sustainability standard setting, all of those stakeholders, all of that investment of time, of energy over the previous decade, bringing that within the remit of the IFRS Foundation so that this new board, this new ISSB, could have a really fast running start at developing its first standards, so that we were not waiting for 5 years for the first standards to be produced. And that is what was achieved. So the Value Reporting Foundation that housed the Integrated Reporting Framework and the SASB standards, and the CDSB that housed the CDSB framework, the Climate Disclosure Standards Board, they were consolidated last year in 2022 with the IFRS Foundation in order to help the ISSB, this new fledgling board, to have a running start in developing the global baseline for sustainability disclosures. And so what 2022 was about was effecting that consolidation and appointing a 14-strong board, full-time board, that was completed by the end of last year, that is now the ISSB board, drawn from all parts of the world, all sections of society. So we've got academics, we've got business leaders, we've got investors, we've got people from the accounting world, part of that board the ISSB. And at the end of June of this year, following a consultation, we issued our first standards, the IFRS S1 and IFRS S2. And then a month later, at the end of July, we had something that was very important to us, which was IOSCO, the global securities regulators, said that they had done an in-depth analysis of the standards and that they were willing to endorse the ISSB's first two standards, and they would encourage all of their national regulators, the IOSCO members, all the securities regulators around the world, to consider adopting the ISSB standard, IFRS S1 and S2. And that will be a major spur for us to achieve this global baseline, getting the adoption consistently adopted around the world. And that is why I'm so pleased to have within my portfolio Indonesia. So I'll be engaging with the Indonesian market, both to raise awareness of these standards and their value to business and to the capital market, but also engage with regulators and policymakers in order to see how we can bring, how we can reform and revise the regulatory framework in order to bring these into the domain in Indonesia. And then, as if that wasn't enough, we consulted for 120 days this year, a consultation that closed on the 1st of September on the ISSB's future agenda. So what should be the next standards over the next 2 years that we should be initiating? What should be the next projects that the ISSB should be initiating, so that we are, yes, a climate first standard setter, because IFRS S2 is that first thematic standard on climate, but we are not climate only. We are a broad-based sustainability disclosure standards board, and therefore it's very important that we move at pace to consider what the market thinks about what those next projects, what those next standards might look like. And so that consultation closed on the 1st of September, and later this year and into next year, the boards will be considering the responses to that consultation, over 400 responses globally, and we were making some decisions on what the next priorities for the ISSB will be. But I know we're here today to talk about IFRS S1 and IFRS S2. And where I would start here is by saying that IFRS S1, this is our foundational document. It sets out the general requirements for a company to disclose information about its sustainability-related risks and opportunity that's necessary for investors in making decisions relating to providing resources to the company. So really thinking about sustainability, risk and opportunity through that investor lens. What is it that the investor really needs to understand in order for them to value a business and to allocate capital productively and efficiently? And to make sure that it's connected and that it can be considered alongside the financial statements. The information is going to be disclosed in general purpose financial reports. We want to avoid silo reporting. We want to make sure that the information can be viewed together and its interrelationships properly revealed. IFRS S1 sets out the core content for a complete set of sustainability-related financial disclosures. So it establishes that truly global baseline of sustainability-related financial information that meets the needs of our global capital markets. S1 applies the architecture of the TCFD recommendations, the Task Force on Climate-Related Financial Disclosures. And I think one of the things you're going to see throughout my presentation is how much the ISSB is drawing on existing resources. The idea here is not to create something that looks entirely new to the world, because we have enough investment, we have enough standards that have been developed over the last number of years. What we've wanted to do is really take on board all of that intellectual capital and make sure that it informs and is part of and embedded within the global baseline that we are delivering. Because many companies already use the TCFD recommendations around the world, and therefore we felt that that was a very good basis for the two standards that we have developed. S1 also requires industry-specific disclosures so that companies can focus on reporting those issues that describe their business to provide useful information for investors. And investors say they want a level of specificity that goes slightly beyond what we're used to in sustainability reporting, something that is much more entity specific, something that is much more specific to a particular sector, so that they can compare companies from one sector to another, maybe in a different market. So they're comparing apples with apples. So having that industry specificity is a very important component for the investor audience. And to help companies identify sustainability-related risks and opportunities and disclosures for matters other than climate, because the climate disclosures are covered in IFRS S2 that I'll talk about in a moment. S1 refers to other sources of information, so how you could use as a preparer other sources of information. For example, the SASB standards, the Sustainability Accounting Standards Board standards. So this means that from day one, companies have a toolkit that they can use to disclose material information about all of their sustainability-related risks and opportunities. And IFRS S1 can be used in conjunction with any accounting requirements. So it's IFRS agnostic in that sense, accounting standard agnostic in that sense. But it also benefits, it has the added benefit of having been designed using the concepts from the IFRS accounting standards, because we believe that that best helps to build that connection between the financial statements and the sustainability disclosure requirements, so that you can deliver a holistic reporting package, what we would call integrated reporting, in terms of the package of information that is delivered from the company to the investor audience. So this slide sets out the contents of IFRS S1, and it has 6 sections: the overall objective of the standard, the scope of the standard, the conceptual foundations of sustainability-related financial information, and this includes requirements on materiality and connected information, the core content disclosure requirements relating to governance strategy, risk management, and metrics and targets. 5, the general requirements, including location of disclosures, the timing of reporting, and the statement of compliance. And then 6, the requirements relating to judgments, uncertainties, and errors, with IFRS S1 asking companies to firstly disclose information to help investors understand the significant judgments that it's made in preparing its sustainability-related financial disclosures. Second, to disclose information about the most significant uncertainties affecting the amounts reported in the sustainability-related financial disclosures. And third, to restate comparative information relating to previously reported errors, unless it is impracticable to do so. Now, as I said, S1 sets out the overarching requirements for a company to disclose information about its sustainability-related risks and opportunities for the needs of investors. And here, what we mean is those risks and opportunities that investors would be interested in. We're not here talking about every single risk and opportunity that a company could be invested by. So it's really applying that lens of, what is it that would change an investor's judgment about a company, and putting it through that lens. And S1 describes this objective by referring to risks and opportunities that could reasonably be expected to affect a company's prospects. That is, its cash flows, its access to finance, or the cost of capital over the short, medium, or long term. And companies identify which information to disclose to investors using the concept of materiality, as we all know. And we use the same materiality filter for the ISSB standards that's applied for the financial statements. So it's the same concept that those applying IFRS accounting standards will be familiar with. So again, it's trying to make sure that when we're talking to preparers, talking to companies, we're dealing with concepts that they're already familiar with, using existing standards, creating that global baseline, using concepts that the market is already familiar with. And so to assess if the information is material, a company will need to assess whether, if it was omitted, misstated, or obscured by other information, whether it could reasonably be expected to influence an investor's decision. Why is that so important? Well, it's important because we want to make sure that our standards enable companies to communicate the key information to the investor market both efficiently and effectively. And we believe putting it through that lens, that materiality lens, will help us to focus the information to that audience. It's important that we're clear about why sustainability-related information matters to investors. A company's prospects are inextricably linked to how it works and how it serves its stakeholders in the community, how it operates in society, and the natural resources that it draws upon through its value chain, what in the integrated reporting world we call the 6 capitals, the resources and the resources and relationships that a company uses in order to create and sustain value over the short, medium, and long term. And so for some years now, through integrated reporting, we've been discovering these connections and including them in our integrated reports. So not just focusing on financial capital and the impact of financial capital on performance, but taking that broader view and saying, well, how does society, how does natural capital, how does intellectual capital, excuse me, how do all of these resources affect our ability to create and preserve, potentially erode value over the short, medium, and long term? And so we've built our concepts in the IFRS S1 on the integrated reporting framework, and we describe that in IFRS S1. Now, it's important for information to be connected to the financial statements so that investors have a complete, consistent, and holistic understanding of the company. And the ISSB has made significant progress in facilitating these connections between sustainability-related financial disclosures and financial statements by including concepts from IFRS accounting standards and the integrated reporting framework in S1 and requirements for connected information in IFRS S1 and IFRS S2, including between sustainability-related risks and opportunities and disclosures on core content. Now, as I mentioned, companies that use the TCFD recommendations, the Task Force on Climate-Related Financial Disclosure recommendations, will already be providing information about their core content areas, which are illustrated on this slide. S1 requires a company to disclose information about its governance, strategy, and risk management, as well as metrics and targets in relation to its sustainability-related risks and opportunities. And these 4 core content elements reflect how companies manage those risks and opportunities. Now, as I briefly mentioned earlier, S1 points to other sources of guidance to help companies identify which risks and opportunities to report on and which information to disclose. Now, S2 sets out the requirements for climate-related disclosures when that is identified as a topic that information needs to be provided about. For topics beyond climate, S1 sets out how to think about this. And first, when identifying what sustainability risks and opportunities to report on, S1 says that consideration must be given to the SASB standards. In addition, companies may consider other materials, especially the CDSB framework, industry practice, and materials of other investor-focused standard setters. So in other words, there's this toolkit available for the business in preparing their sustainability-related financial disclosures, drawing on the SASB standards, the CDSB framework, industry practice, and other investor-focused information sources as well. Now, we know that applying the ISSB standards will be a big change for many companies. And so to help companies get ready to report using S1 and S2, the ISSB believes that reliefs for the first year of application are very important. This is not a process where we're trying to impose a burden or cost on business. We know that there's huge value to be secured by going through this process of understanding sustainability risks and opportunities in the business, how you can change your business model and strategy to take account of new opportunities that will be emerging, having that better dialogue with investors that will unlock sources of investment and capital. So we know the benefits are there for the taking, but the transition will take some time in order to embed. And we want to be supportive of companies on this journey and not impose undue burdens and undue pressure on companies in taking on these new standards to release all of that value, all of those benefits. And so there are 5 reliefs that we have provided in the first year of application. Firstly, companies can limit disclosures to climate-related risks and opportunities and begin reporting on their other sustainability-related risks and opportunities in the second year they apply IFRS S1 and S2. Whereas ultimately, the sustainability information needs to be provided at the same time as the financial statements, in the first year, companies can provide annual sustainability-related disclosures with the next half-year reporting, rather than at the same time as the financial statements. And then there are other reliefs to assist companies in their first year that are really important. So companies don't need to provide disclosures about Scope 3 GHG emissions, apply the GHG protocol corporate standard to meet emissions if those companies are already using a different measurement approach, and provide comparative information. So there are other reliefs that we've included that will help, we hope, that process of transition and help business to think about unlocking the value from adopting these standards, not seeing them as a burden or a cost. So in terms of when to start applying IFRS S1 and S2, they're effective for annual reporting periods beginning on or after the 1st of January 2024. Now, they can be used earlier as long as they're used together and when this is disclosed. And considerations in setting 2024 effective date were that a primary reason is a pretty straightforward one, which is that there is a real urgent demand from investors and from companies for decision-useful, comparable information, and particularly better information about climate and climate risk. This has been a momentum that has been building over the last 5 or 6 years, and we've reached a point now where regulators, governments, and the market are aligned on the need for urgency in terms of getting these standards adopted, and that's why we chose a 2024 effective date. Also, we feel that S1 and S2 do build on well-established standards and frameworks. For example, the TCFD recommendations and the SASB standards. And that means that many companies will already be adopting or advanced in their consideration of adopting these standards and frameworks. The transitional reliefs, we think, will help support companies put in place reporting practices and structures in a way that meets their own resource capabilities. And companies will comply with disclosure requirements using information that's reasonable and supportable and is available without undue cost or effort. This whole idea of the proportionality principle that runs through the standards. So we're not about it trying to impose undue cost and undue burden on business. We are, as I say, trying to release the benefits of adopting these standards for business. We're not trying to impose an undue cost. And finally, CDP, that many of you will be aware of, will incorporate S2 climate-related data into its platform from 2024 disclosure cycle. And of course, many companies disclose on CDSB platform and will collect data as required for S2 for the 2024 financial year. So we're seeing an alignment of other initiatives with IFRS S1 and S2. So I'll quickly conclude by talking about the IFRS S2, which are the climate-related disclosures. And IFRS S2 fully incorporates the recommendations of the TCFD, the Task Force on Climate-Related Financial Disclosures. And we've long recognized the conceptual consistency between, for example, integrated reporting and using the TCFD recommendations. So once again, there's a link here between resources that the market may already be adopting and the IFRS S2. S2 climate-related disclosures sets out the requirements for a company to disclose information about its climate-related risks and opportunities. And it builds on the requirements described in IFRS S1. And it's very important to see S1 and S2 as working together. They are not separate and should not be disclosed separately or adopted by markets separately. They are a package of disclosure requirements, one general requirements, one a specific standard focused on climate-related financial disclosures. In applying S2, a company identifies and discloses material information about climate-related risks and opportunities. And S1 helps companies work out how to do this. This is why they have to be taken together. They're not separate in that sense. Now, investors need this information to understand how climate affects a company's performance and prospects, including its transition planning, its ability to adapt, and how climate risks manifest in its value chain. S2 is required, as I keep saying, required to be used with S1. This is because S1 sets out the way companies should approach reporting. For example, it really establishes the key concepts, such as the need for connected information and how to think about the value chain. It provides important guidance on the assessment of materiality to be used when applying S2, which determines which particular disclosures a company needs to apply given its circumstances. And it sets out those qualitative characteristics of information that have to be provided. For example, information that needs to be relevant and representationally faithful. So it's important that this happens. And then just like S1, S2 requires a company to disclose information about its governance, strategy, its risk management, as well as its metrics and targets, but specifically focused on climate-related risks and opportunities. And some of the key requirements in S2 are found within strategy and metrics and targets. So for example, S2 asks that a company be provided about climate targets that a company has set, such as its GHG emissions targets, and how it plans to achieve them. And then climate change and the uncertainties associated with that can affect the resilience of a company's strategy and business model. So to help investors understand its climate resilience, S2 requires a company to disclose information about the implications of climate change for its strategy and its business model, and its financial and operational capacity to adjust or adopt over time. And S2 requires all companies to use climate-related scenario analysis to inform their disclosures about their resilience to climate change. However, S2 does not specifically specify which scenarios a company should use in its analysis, but it requires the company to use relevant scenarios and provide information about the scenarios that it has selected, and to provide information about other relevant assumptions that it's used in its scenario analysis. And S2 contains guidance to ensure that the requirement to undertake scenario analysis to support resilient disclosures is proportionate, coming back to this proportionality principle. And this includes guidance on how a company how its circumstances are affected in these effects. S2 requires a company to disclose its absolute Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. In other words, the standard really requires a company to disclose their direct and indirect emissions. The emissions must be measured in accordance with the GHG Protocol corporate standard, unless a jurisdiction requires a company to use a different approach to measurement. And not all companies currently measure their emissions using the GHG Protocol corporate standard. So if a company is using a different measurement method, it is permitted to use that method in its first year of applying the standard, as I explained during the relief section of the presentation. And this is intended to assist companies when starting to use the standard. A company must consider the 15 categories of Scope 3 GHG emissions set out in the GHG Protocol corporate value chain standard, with information being disclosed when material. Now, these 15 categories of Scope 3 GHG emissions are intended to provide companies with a systematic framework to organise, understand and report on the diversity of Scope 3 activities within the value chain. And this includes categories such as purchased goods and services and the use of sold goods. And then finally, S2 requires a company to disclose industry-based metrics that are associated with common business models and activities in a particular industry. As the effects of climate-related risks and opportunities vary significantly by activity or industry, such metrics are important for investor understanding. And to provide these disclosures, companies are required to refer and consider disclosure topics and associated industry-based metrics in the industry-based guidance on implementing IFRS S2. Now, throughout this presentation, I've touched upon some of the guidance that's included in IFRS S2, and this slide does provide a summary. So I hope that, in short, I know that I've galloped through a lot of information there in S1 and S2, but I hope that that has given a flavour of the standards, the importance particularly, not just on the content, but the philosophy of the ISSB in providing that global baseline, in working with jurisdictions, in trying to work both with the market and with regulators, in trying to build that comprehensive global corporate reporting system, in working with business so that these standards are not seen as a cost and a burden, but a benefit so that companies see the value of them, and ultimately so that we're all working in harmony towards those goals that we all wish to see as human beings, of companies, of businesses, of investors, of society, of our capital markets, working in harmony so that we can release value from our markets, and so that companies that are really thinking about their business model and strategy, developing sustainable business models, thinking about the long-term viability of their business, that it's these companies that are attracting the capital of the future to enable them to grow, to enable our capital markets to be strong, and enable our society to see the value of our capital markets, because after all, that's in the public interest, in the interest of all of us. I look forward very much to continuing our work together, to working in particular with Indonesia, and thank you very much for the opportunity to share my thoughts with you today. Thank you.
Thank you, Jonathan. It's insightful. This new IFRS here for the accounting indicators in Indonesia. So maybe before we move on to the other presenter, do you have any suggestions how these new standards on sustainability then should be also introduced to our students at the accounting school? Any comment, Jonathan?
I apologise. There was a bit of an echo, and I couldn't quite hear. I couldn't hear what the question was. I'm sorry. I apologise.
Yeah, because here we are the accounting educators together in this room, and this new IFRS S1, S2 is quite new to us. Do you have any suggestion how we are going to also introduce this IFRS to our students?
Absolutely. So the first point to say is that, well, I'm very happy to continue our dialogue together. And if there are any specific questions offline, Monica knows how to get hold of me, and I'd be very happy to engage privately and have a conversation with any of you. But we will also be providing, in addition to the presentation today, we're developing educational materials ourselves that will include illustrative examples, so illustrative guidance. So we're not stopping at just producing the standards. We will be producing educational materials. We'll be producing an online resource that will be accessible. We'll be producing those illustrative examples, which we believe will help to bring the standards to life. We're also very keen to make sure that as we go through the adoption process, that markets and companies in different markets learn from one another. And one of the benefits of me looking after 4 jurisdictions in my work with the ISSB is that I can share insights from other markets to help bring everybody up to a kind of good level. Hopefully that is kind of be a bit of a pyramid of knowledge. And so these are some of the very practical ways that we will be building on the resource of the standards to help educators and others in the market kind of build their capacity for spreading the word and for building an understanding of the standards in the market. But as I say, it starts with engagement. It starts with reading and really understanding the standards in great depth. But then there are other materials that we're developing that will help to support that process of education and information and awareness building.
Yeah, it's great and appreciated, Jonathan. We, the educators, also would be very happy to be included in this project, especially to ensure that these IFRS are implemented and adopted there. And maybe we can also together contribute, even though it's a little and small thing, but for the the sustainability of the financial and also the planet in general. Thank you, Jonathan. We have a very limited time for the discussion, but I think we are going to move on to the next speaker. If there is any questions from the audience, yeah, you may share your question later on after the video pre-recorded that we will be presented for you. It is the video pre-recorded from our second speaker, that is Mr. Chu Chun Lee. Okay, Mr. Chu is the regional head of policy for ACCA, tasked with supporting its advocacy and policy work across Asia Pacific, including Australia, China, Hong Kong, Malaysia, Mekong region, and Singapore. He works with key stakeholders to identify and drive new research initiatives that provide evidence-based policy and thinking impacting the business community and profession, demonstrating ACCA's regional and global reach and public values. Additionally, he is a regular speaker and panel chair on topics including integrated reporting and evolving role on finance leaders and audit talent issue. Prior to joining ACCA, Mr. Chu was a key member of the professional practice department of a Big Four accounting practice, where he focused on audit methodology and regularly delivered internal and external trainings on auditing and quality assurance matters. He has more than a decade of experience in public accounting and has worked in audits of and special assignments for multinationals and local listed companies. Mr. Chu's presentation this time will talk about the assurance process for the disclosure on sustainability and climate-related financial disclosure. So I think the committee is ready with the video.
Good afternoon. Bapak Adan Adiputana, President of IAI, Chair of the Academic Accountant Compartment, Professor Dion Agustia. Greetings to all members of IAI, all participants in the National Accounting Symposium. Selamat sore. It's an absolute pleasure to be addressing you today, and I apologize that I'm not able to deliver this live because I'll be traveling and in a different time zone on the day of the symposium. I do sincerely hope for an opportunity to join you in person in the future. In Indonesia, I understand that clear decarbonization targets have been set at both government and at the private sector level, driving towards achievement of the net zero target. So sustainable development, sustainable growth is of critical importance. Professional accountants play an important role in transforming practices in corporates, in the public sector, in public practice as well. And that's underpinned by the solid technical knowledge and also importantly, strong ethical backbone that inspires trust. I understand that the National Accounting Symposium is an important platform in Indonesia for researchers, both academia and practitioners, in your continued pursuit of excellence in research and in knowledge in the various accounting disciplines. And I truly appreciate having this opportunity to be sharing with you and to draw your attention to the IAASB's recently issued public consultation on assurance standard for sustainability information. We call it ISSA 5000. And for simplicity's sake, I'm going to call it exposure draft ED 5000 for the rest of my presentation. Now, we certainly hope that you will be an active participant to our consultation process, whether through your organization, through the Indonesian Auditing and Assurance Standards Board, through EIE, or in your personal capacity. Now, assurance is a very important part of the trust and integrity equation. I'm sure you agree with that. This is hence a very critical emerging area, and we will be very grateful for all feedback that will help us ensure that the final standard lands in a way that will work very well in all jurisdictions, in particular in Indonesia. Now, Indonesia economy is widely expected to grow into one of the most powerful globally within the next couple of decades. So every incremental step you take is a big step forward for the global economy. The IAASB has already embarked on an extensive outreach program. There are various webinars with in-depth presentations that have already been held, and more will continue to be organized over the next couple of months. For today, I'll be sharing with you some key highlights from the proposed standard. I will not be diving into deep technical details. I definitely hope to give you enough to get you excited, to get you curious, so that you'll start watching the other webinars and to read the proposed standard and the explanatory memorandum yourself, because that will be the best way to get all the information you need. So let me start off with a little bit of an overview. Why are we here? The IAASB has prioritized the completion of ISSA 5000 as a standalone end-to-end sustainability-specific standard. Now, as a board, we committed to having a final standard approved before the end of next year, 2024. And there are a few reasons for that prioritization. Number one, we believe and we've been told that users of sustainability information will benefit from external assurance provided by independent professionals who are committed to a high level of quality and ethical standards. And number two, that there are a need for global baseline that is developed in a robust and transparent manner. We've seen that for the reporting side with ISSB under the IFRS Foundation, and it is equally important to have the same robustness, the same transparency on the assurance side. Number three, the market needs an assurance framework that builds upon well-tested practice that is already in place around the world. Number four, we're aware that in some jurisdictions, the countdown clock is already ticking for assurance requirement to be put in place. And as a result, we need to move very quickly, but of course, very thoughtfully to publish a proposal. So here we are. We have accelerated the timeline. We have released what the board views is a robust standard. And at this point, it is crucially important that we get your inputs to make it better together. The end goal from our perspective is for marketplace to think of sustainability assurance the same way that they think of financial audits today, with the same level of confidence, with the same level of quality, and for it to be as commonplace as financial audit. But we won't get there overnight. Now, we believe the proposed standard ED 5000 represents a significant improvement over existing standards in terms of driving consistency and quality, because we have added a great deal of specificity over our existing assurance standard as it relates to sustainability information. So ED 5000 is the general requirement for sustainability assurance. It is, as I mentioned, an overarching standard for sustainability. ED 5000 covers the entire engagement from beginning to end, from engagement acceptance all the way to reporting. At the same time, recognizing that it's an overarching standard, we can't have everything all at once. It is not going to provide the same level of details that we have now with financial statements audit, where we have the full suite of international standards on auditing ISA. Also, we need to recognize that both the reporting landscape, the reporting practice, as well as assurance practice are on a maturity curve. And we need flexibility to deal with emerging issues and other stakeholders' feedback moving forward. So having now opened up the new 5000 series, we have the opportunity to go deeper in future standards. And we may next go into specific topics such as human rights, human capital, biodiversity. We could go into aspects of topics, for example, performance against targets, for example, strategy. Or we could be dealing with specific elements in an engagement, for example, materiality, internal controls, reporting, right? So we have what we think are sufficient material in this overarching standard in relation to all these different elements of the engagement, but there may be a need to do a deeper dive in future standalone standard. So we're keeping an open mind about what we may deal with in greater detail at a later date. And in relation to that, in our consultation, we asked a specific question about topics that you think we should be addressing at a future date. And we hope, as with other aspects of the consultation, you will share your view with us on that. Now, there are a few overall design principles that are important for me to flag to you up front. ED 5000 is designed to be suitable for use for all sustainability topics and information disclosed about these topics. We have written the standard to be framework and topic neutral, so it can be applied whichever framework the company adopts to report on sustainability. So it could be ISSB standard, it could be the European ESRS, for example. Now, one thing that we've heard repeatedly from regulators and other policymakers is that we need to make the standard profession agnostic. Our current assurance standard ISA 3000 is already profession agnostic. So it's the same with ED 5000. And that means that it has to be relevant to it. It needs to be able to be applied by both professional accountants and non-accountant assurance practitioners, as long as they fulfill the full requirements of the standard. Now, we knew that it is important for ED 5000 to be entirely standalone standard. So what that means is you do not need to refer to ISAE 3000 to understand the foundational principles and performance of an assurance engagement. All the necessary elements have been brought over from 3000 over to ED 5000. It is absolutely critical that practitioners applying the standard, whether they are professional accountants or not, are committed to adherence to stringent ethical requirements that are at least as demanding as the ISBA code, which includes independence requirements, as you are aware. And also that the practitioner is part of a practice that is subject to ISQM 1. So these are the fundamental premise to all IAASB standards, and these are the non-negotiable elements that underpin quality, and that is very, very important. Now, ED 5000 addresses both limited and reasonable assurance. Where appropriate, we have signpost requirements that are different under limited vis-a-vis reasonable assurance, and you will see a capital L or capital R next to the number, depending on whether they are requirement for limited or reasonable assurance. And we present them in table format, side by side, to facilitate ease of comparison. Finally, we have developed ED 5000 to be principles-based while still providing sufficient specificity to drive consistency of the conduct of sustainability assurance engagement for all entities, regardless of size or complexity, and to help address challenges typically faced in conducting such engagement. Now, as you can imagine, it's often a delicate balance. We often have one camp telling us that you need to keep it at an absolute high level, principle based, otherwise you end up offering rigid rules that ignore proportionality. And then you have another camp that will tell us, give us more support, give us more illustrations, give us more help. So clearly, again, this is the point where we need your inputs on, have we got the balance right between principle-based requirements and with enough guidance to address the challenges and to drive global consistency. Now, as mentioned right at the very beginning, I don't intend to, and we don't have time to go into any level of technical details. What I thought I'll do in the remaining short time that we have together is to pull out two topics and to share how we have provided greater specificity in the context of sustainability information assurance. So one of the key areas that many stakeholders are concerned about, in particular among the regulatory and investing communities, is fraud in sustainability reporting or greenwashing. Now, the term greenwashing is not explicitly called out in ED 5000. I don't think so. But if you do a search for the word fraud, it turns out more than 100 times in the 200-page ED 5000. Now, it appears in multiple places. It appears, for example, in the context of professional skepticism, which is defined in the same manner as in an ISA, which is attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatements due to error or fraud, and a critical assessment of evidence. And professional skepticism is to be maintained throughout the engagement, recognizing the possibility of misstatements due to fraud may exist, notwithstanding past experience with management and those charged with governance, the honesty and integrity of management and those charged with governance. Fraud is also referred to in the engagement team discussion, engagement leader, key members of engagement team, plus key external experts as well. They huddle together, they discuss where misstatements may arise, whether due to fraud or error. Fraud is also referred to in the context of understanding sustainability matters and sustainability information, including characteristics of events or conditions that could give rise to misstatements of disclosure. In the application material A296, for example, we provided a helpful list of how material misstatement due to fraud may look like for sustainability reporting, which I think serves as good reminders. So, for example, fraud could appear in the form of aggressive, overly optimistic internal and external targets. It could be incorrect or misleading claims around products. It could be misstating sustainability information in order to get special funding or to fulfill a customer's demand or to obtain certain green credentials. Fraud could also present itself as an attempt to reduce carbon tax liability or overstate carbon credits. And that could, of course, be increased opportunity for fraud due to immature internal controls over sustainability reporting and so on. And then in separate application material A355, we provide examples of the different forms of misstatements that could arise due to fraud. For example, it could be omission of information. And an example that's in the application material is a company reporting on land rehabilitation program for 3 of its mining sites, but they keep quiet about another 2 sites where significant degradation has occurred and there's no plan to rehabilitate the land. So they omitted information. There's incomplete information here deliberately, and that is obviously fraud in order to mislead the reader. Another example, incorrect classification of information. So in order to report favorable diversity information, gender diversity information, the company decides to classify seasonal contractors who happens to be mainly females as permanent full-time contract employees so that the overall gender diversity information look favorable. So all these, what I've just mentioned, form part of the risk assessment process that the practitioner will need to go through, and that will form the basis of their further assurance procedures. And of course, we also have requirements around the required responses by the practitioners when they encounter fraud or suspected fraud, and that include looking at the implication on their risk procedures that they've already done, and also evaluating the reliability of the written representations and so on. Another area that I want to very briefly touch on before we wrap up, again, just as an illustration, is the consideration of materiality. Unlike financial statements, which are reported in a single currency unit, so it could be Indonesian rupiah, it could be US dollar, for example, sustainability information, on the other hand, may be measured in different units. Right. So, for example, sustainability report could include, among other things, carbon dioxide emission, and that is measured in tons. And then it could also report on safety violation, and that is measured in terms of the number of instances of such violation. So the different measurement units make it difficult to determine materiality for sustainability information as a whole. So it is difficult to say, okay, this is the number, this is the materiality for this entire sustainability report. Our board therefore decided that materiality would not be considered or determined for each disclosure, and not necessarily for the information as a whole. Furthermore, sustainability information often includes more qualitative disclosure. For example, this description of processes. Now, as you can imagine, it's more challenging to determine materiality when planning and performing an engagement for qualitative disclosure. Now, it's difficult to assign a number to a qualitative disclosure, but we did hear on outreach that practitioners do apply the concept of materiality to evaluation of misstatements identified in qualitative disclosure. So when they identify a misstatement in qualitative disclosure, they will consider, well, would that misstatement influence the decision of a user? So ED 5000 requires a practitioner in planning and performing the engagement for quantitative disclosure to determine materiality and performance materiality to deal with aggregation risk. And that is consistent with the extent requirement within ISAE 3410. And then for qualitative disclosure, the practitioners will not be required to determine, but consider materiality. Now, I also want to flag very quickly that a practitioner's consideration of materiality, so the materiality that we're talking about in ED 5000, is different from materiality consideration from the preparers, the reporting perspective. In reporting, materiality process is one where the company uses to identify information that's relevant for users, and that will be included in the report. So understanding the management's materiality process may be useful for the practitioners, but the practitioner's consideration of materiality, what we call materiality in ED 5000, is focused on whether the misstatement is material. That is, whether it will be reasonably be expected to influence the decisions of users. So I've shared with you two quick areas to illustrate what we as a board have done to build in greater specificity. As I said, I really want to know whether you think we have the right requirements built in there, whether we have built the right level of guidance as well inside ED 5000 to support application of the requirements. Okay, so I think this is a good place to do a wrap up. I mentioned at the beginning that IASB has planned and has started to execute a comprehensive global outreach program. If you go to our website, you will see already uploaded there recordings from previous in-depth webinars that have been held. So welcome to have a look at those. And there are more coming up, including one that is organized by IFAC and targeting audience in Asia Pacific. And that will be happening on the 28th of September. And I'll be joining a few other board members to do further sharing. And I'll also be moderating a panel which comprises of a representative from regulator, from investor. We have a practitioner. We have also a colleague from the ethics board joining us on the panel. So don't miss that. We have 4 global roundtables happening in this period as well, in New York, in Brussels, and Sao Paulo, and there's one in Asia, of course. It will be held in Kuala Lumpur, Malaysia, on the 10th of October. The Indonesian Auditing and Assurance Standards Board has been invited, as well as the audit regulator from Indonesia. So across all these different engagements, the key objective is, of course, to excite you, to engage you, and to invite you to participate in our consultation. This is the time to voice out. This is the time to influence the standard. Let us know what you like about it, what you don't quite like about the standard, so that we can all work together to make it better. So with that, I thank you very much for your kind attention. Again, great appreciation to EIE for the invitation to share. I hope that you now feel that you know ED 5000 better than when we started. And our board look forward very much to hearing from many of you. Terima kasih. Thank you.
Okay. Can we try again? Yeah. Yes. Chun Wee is not with us this afternoon, so unfortunately we cannot give him some question if you have. But Jonathan is still with us. If you have question for Jonathan. Any question? You're still there, Jonathan? Is Jonathan still with us? I think he's leaving already, yeah? Yes, Jonathan is leaving. But anyway, I think we need to wrap up in minutes because we are timing out. But listening to these 2 speakers, I think we have another big homework for all of us. We are not finishing chewing the technology adoption for accounting. And now we have 2 different standard of accounting, and that is the IFRS S1 and S2. It is on table already, and it will be effective next year, 1 January 2024. And listening to the video from Chun Wee, we also heard about the different perspective on auditing, because we are going to do some assurance on something that pretty much different from the financial issue. So good luck for all of us. Hope everyone is excited, embracing this new standard for the sustainability, not only for the organization, but also for the environment. So thank you very much for keep staying with us. We have another session after this, And thank you again, and big applause for the IAI for this new session on Symposium Nasional Akuntansi. Thank you very much.